Thank you very much, Mr. Chairman. Mr. Barofsky, I want to thank you for the tremendous work that you've done. We're really in your debt.
Thank you.
This question, as I understand it, what you're saying is that Dodd-Frank has not succeeded in making the market believe that it has addressed this question too big to fail.
In essence, the implementation of Dodd-Frank has not succeeded in convincing the market.
And when you say the implementation, is that because of the regulatory provisions that had to be part of the follow-up of Dodd-Frank?
Right. So much of Dodd-Frank put the responsibility on the regulators and frankly on the Treasury Department as the chair of the Financial Stability Oversight Council to implement the necessary changes and send the right messages to the market.
So we would have been better off with Congress specifying what were the guidelines and what were the parameters within which these large financial institutions could operate? Is that what would have been a better approach?
Well, it would. I'm not going to say whether it was a better approach. It would have been a more effective approach if ideas like the Senator Brown's and Senator Kaufman's amendment in the Senate to Dodd-Frank, which would have put leverage caps and size caps on the largest institutions, if that had passed, that would have sent a very large and very clear message to the markets that the largest banks are not going to be too big to fail, and much simpler. You would have relied a lot less on the regulators if that were included. All
right. And then when we get into the regulators, we're, of course, having a budget challenge in this country and in this Congress. And if we're cutting the budget for instance, the SEC by $25 million, how does that affect what kind of signal does that send, and how does that affect the ability to actually supervise the regulations that would apply?
Well, according to the SEC, it would have a very direct result. It would inhibit their ability, according to Chairman Shapiro, of being able to implement the requirements that they need to do under Dodd-Frank.
Right, and in your independent capacity, that conclusion that they're offering makes sense to you. That's a threat to their ability to carry out their responsibilities.
There's no question. When you're in a regulatory agency, a law enforcement agency, and you have fewer resources, you have to make cuts. Frankly, you have to make cuts across the board. Everything suffers. So that will suffer. I think enforcement will suffer.
And the same thing with the Consumer Financial Protection Board. Dodd-Frank called for an independent watchdog, and that would be independent. It wouldn't be there advocating for the interest of the large financial institutions. It would be advocating for the interest of consumers. And the CR provision, the continuing resolution provision, would cut that budget by 40%, from about $143 million to $80 billion. So would you have the same response to that budgetary cut and its impact on being able to provide those protections?
I would imagine so. I'm not really familiar with the budget of the Consumer Protection Bureau and what their requirements are. But again, having been fortunate enough to work with Elizabeth Warren as she was the chair of the Congressional Oversight Panel, I would certainly take her at her word that if this would impact the ability of that bureau to go forward, that it should be accurate.
Let me ask you this. One of the points of this hearing is there are some legitimate questions about how TARP is being implemented and whether too big to fail is going to work. And it's not clear what the consensus would be on this committee as to whether we'd want to be tougher on the too big to fail policy or not. That's not part of what the hearing is. But let's assume that we did have a view that was shared across the aisle, both sides, where we did want to protect the taxpayer from a future bailout. What would be your recommendation that Congress should do in order to provide us with protection against another bailout?
Well, I think, again, step one is working within the realm of the possible of the bill that's already been passed. And that is to exert as much pressure as you can on the Financial Stability Oversight Council, on Secretary Geithner, to fulfill the promise and to not take an incrementalist approach, but to take a strong, hard look at the recommendations and the advocacy of Chairman Baer and use those tools. And the goal should be nothing short of getting rid of that subsidy, getting rid of that economic advantage that the largest banks have over their smaller counterparts, whether it's the 78 basis points referenced in the Chairman's opening statement, whether it's the the implicit guarantee, the increased credit rating. That has to be a goal, because this is the remarkable thing about too big to fail. Perception matters. Perception is as important as anything else, and it's unfortunate. It's unfortunate the credit rating agencies still have so much influence over things, but that's the reality. And we need to take that perception head on, and we need to figure out how to use the tools that we currently have to try to deal with that perception, and not just, I'm sorry, essentially ignore the advocacy of Chairman Bear and others who have strong ideas about trying to get us to a point where these banks no longer enjoy that subsidy.
If the gentleman yield, I would be happy to. I think we agree that we want to end too big to fail, and I know that's been your advocacy in your time in Congress as well as mine. The bill of goods that some of us saw coming out of Dodd-Frank is that it would prevent too big to fail, and I'd be happy.
Well, I appreciate that, and as the Chairman knows, I voted really in significant part because of the testimony of Mr. Barofsky in favor of the committee bill on hemp. And to the extent that we can find ways to solve the problem, we've got to do it together. So I really appreciate your statement.
Well, thank you, and I appreciate the gentleman's advocacy. We don't always agree, but you've certainly